Well, folks, people are walking around absolutely blind about what is about to transpire in the stock market. We are on the verge of some absolutely shocking moves that people are going to look back at a few years from now and be like, wait, what just happened? How did I miss this? How did I not see this? But when I say people, I'm not just talking about retail investors. I'm talking about Wall Street's walking around absolutely blind without a cane right now, and they have no clue what is about to transpire here based upon so many different factors. I'm going to take you guys through this. I feel like it's my job to kind of always open up everybody's eyes to what's likely to transpire here, right? And get everybody mentally prepared for what's coming so you can hopefully think about your portfolio and how you might need to position in these different environments with what's about to happen, right? The public account, I've been able to build this account on the back of just like Wall Street not understanding what was coming next, right? And a lot of times I'll be buying stocks that are, some folks would look at it and be like, why are you buying that stock right now? This is a falling knife. And then a year or two later, people look back and like, dang, that was a genius move. Like, wow, he really pulled that off. Like, how did that even happen, right? And I've been able to take advantage of that year after year after year. And this is another extraordinary opportunity based upon what's about to transpire here. And I'm telling you, we're on the doorstep of some absolutely incredible moves that I'm about to take you through in this video here today. Okay, all I ask from you guys for putting this video here today together for you guys is you to hit that like button. That's it. That's all I need. Please take the little half second that it takes and hit the like button on this video. That's all I ask, okay? If you want to subscribe to the channel, you can do so. It's free to subscribe. 8,000 new subscribers here on the channel. I appreciate each and every one of you for being here. And for the people that watch this video on the day it comes out, just so you guys are aware, this is the last day to get in my Patreon. So if you want to see the stocks I'm buying and selling each week, plus get access to that Market Hours Discord chat, this is the last chance, literally today before the 30% price increase. So if you want in for the grandfathered prices, do so now. That's pinned comment down there. For people that are watching this video tomorrow and after, unfortunately, the prices will have already gone up to $33 on this tier and $163. So you'll have missed the grandfathered pricing on that. Once again, that will be pinned comment down there, okay? Alrighty, a lot of blind spots in this market. Let's go through the first one. Oh my gosh, are people making a big mistake in regards to this one? And when I say people, I'm talking about Wall Street. They think the move in Meta's done. Right? They don't think Meta is going to keep moving higher. Like, no, like that's about it. They think this move that's transpiring today, they think that's the reality move, and that could not be further from the truth. You got a whole situation coming for you, okay? This was Meta's income statement they just reported. They reported revenue that was up 19%, income from operations that was up over 25%, net income that was up 35%, and diluted EPS up 37%. That is not a business model that is in any sort of position where it's not going to continue to go up quite significantly. And so this sets up Meta for another amazing year in 2025 in regards to their business model and in regards to their stock price. And I'm going to take you through in just a moment a shocking move that's about to transpire in the stock price. I don't think a lot of people are prepared for, right? Now, the market maker is destroying everybody in the short term, right? A lot of people kind of playing call options on Meta, thinking the stock was going to go 615, 625 after earnings, right? 630, 650. They thought there was going to be an epic move here, and the market maker is just destroying everybody. There's no big downward move. There's no big upward move. And so the market maker is just, give me the money, give me the money, give me the money. And everybody that was buying put options and call options on Meta stock, thinking this stock would move huge on these earnings, is getting absolutely wrecked. Absolutely wrecked. And this is just another reason why you don't try to play these short-term games in the market, because they always got the angle on the short term. They always got it. You focus over the next several years, you now are the house. You're either the player at the casino or you're the one that's running the casino. You can ask yourself what you want to be. If you want to be the player at the casino, sometimes you can win. Most times you're going to lose, right? If you want to be the house, guess what? Most times you win. And so as a long-term investor, you flip this and now you're the one in advantage, right? But these people that try to play these short-term gains, I'm going to buy a bunch of put options, Meta's going to tank 10, 15% on earnings. I'm going to buy a bunch of call options, Meta's going to go up 10, 20% on. They're all just got wrecked. They all just got obliterated, right? And even the people that thought, oh, I'm going to outsmart the system, I'll buy puts and calls because one of them is going to hit. Those people even got destroyed because neither one ended up hitting, right? This little teeny move here. But this is not the reality move. The next move up here from Meta is going to be $700 for the stock. Now, in regards to Meta, they beat 7 straight quarters. And when I say beat, I'm talking double beats. Earnings per share and revenue. And some of these beats have been substantial, including this latest quarter beat, 73-cent EPS beat. That's shocking number in regards to that, right? So Meta just continues to beat, which means what? This is what it means. The numbers, the projections you see for Meta are all likely off. If the company continually beats analyst expectations in regards to revenue, and especially in regards to earnings per share, then likely the forward P you see is much lower in reality than what it says, right? So you look at a forward P, because this is judging off of, analyst expectations on average, right? It says, oh, Meta's trading at a 24 forward P, which is still a steal deal given the growth rates this company has. But the reality is it's likely not trading at a forward P of 24. The reality is the forward P for Meta is likely 15 to 20 right now. That's like where the market trades at in general, right? 15 to 20 forward P. But the thing is, Meta's growth rates are significantly above an average stock in the market, which means the valuation should be at least double where it's at right now, right? Next year, earnings per share growth, analysts are at high single digits. They're probably going to do 20% plus. Next year, revenue growth, analysts are at around 13, 14%. They're likely going to do 15 to 20% revenue growth next year. So all these numbers you see are all likely too low. Now, I have news for you. Meta stock's going to hit $1,000 plus in 2025 or 2026. $1,000 plus in 2025 or 2026. And here's why. Run some valuations on Meta, right? 17% revenue growth on average for the next few years is pretty realistic for this company overall. Net income growth of 25% is significantly under what they've been doing recently. And even with that lower number there, you're basically setting this company up in a position where they should be 70 billion plus in net income in 2025, and I don't see that being a stretch at all. And it should push close to $90 billion of net income in 2026, right? Now, a PE range on the stock should be somewhere in the 30 to 40 range, right? Considering, you've got 15% plus revenue growth, and then let's call it 25% type net income growth. You should be somewhere in the 30 to 40 PE range. So that puts this stock somewhere between $825 and $1,100 next year, 2025, right? That puts the stock somewhere between $1,031 and $1,375 in 2026, which is why the stock will be $1,000 plus in the next 2 years. And so you look at the stock at 500 or so today, hey, cool. It means nothing. The fact that the stock's done so tremendous over the past 2 years, and look at the last 2-year chart of the stock, and how much money folks like myself have made, made $800,000 or whatever in the stock, it's all irrelevant. The bottom line is there's another double up coming here in regards to Meta. And the best part of this whole situation is a few years after that, another double's coming. Another double's coming a few years after that, and the stock will go $2,000 plus. That will probably be, I would say, 3 years-ish, 3 years, somewhere around that, after the stock hits $1,000. So let that sink in for a moment. We got a double up coming, and then we got another double up coming right after that, okay? Now, the other thing that is amazing here in regards to Meta is they have something significant going on beneath the surface right now that not a lot of people are factoring in. I can tell you, no one's really factoring this in. The Llama models are incredible. And they continue to attract more and more folks to use the Llama models, which is going to be absolutely massive in regards to LLMs and AI in general, right? Nothing's priced in here in regards to stock, in regards to Llama. I mean, nothing is priced in. So as people begin to understand that opportunity better and better over this next several years, you're going to start having hundreds of billions of dollars of market cap be priced in for Llama, if not $1 trillion plus. But it's going to take several years for people to understand that. But zero is priced in regards to stock right now, right? Amazon is trading way too cheap right now. This stock's going to be 300 plus 24 months from now. People are completely missing the whole opportunity here in regards to the e-commerce side, the advertising side of the business, and the AWS side, and how we're likely going to see a reacceleration of growth in regards to AWS. This stock's trading way too cheap. It's trading 185 here today. Any dips you get on this stock is a great buying opportunity, especially if you're looking for a piece of steak in your portfolio. Amazon is that piece of steak. We're going to see the earnings per share likely skyrocket in 2025 and 2026 for this company. 300 plus is coming in the next 24 months for this stock. It's trading way too cheap. Like I said, every dip on this stock is 185 here today. Any dips you get, or just be thankful. That's all I'll say about that. Be thankful. AMD, investors are making a big mistake in regards to AMD. Big mistake. They're starting to get too impatient in regards to Lisa Su and AMD. Okay, and so if you look at the stock, basically the stock hasn't moved in 3 years. Pull up a 3-year chart of it. Here it is, and look, the stock's gone nowhere for 3 years. That's incredible. Investors are now at a stage where they're actually getting too impatient, I'll say, with Lisa Su and what AMD's doing. And by the way, Lisa Su, I remember when this company was a $2 stock, shortly after she took over the company, right? It was a $2 chuck, and it's $144 here today. One of the most amazing big tech companies in the world. You got to understand with AMD, they have two main businesses and they have two minor businesses. Their main businesses are data center and client segment, okay? Their two minor businesses are the gaming segment and embedded segment. Now, in regards to their two main businesses, they're booming. Data center segment revenue was up 122% year over year. That's incredible. Client segment revenue was up 29% year over year. But they have two minor businesses. Those ones are in a troubled spot right now. Gaming segment down 69% year over year with their revenue. Horrible. Embedded segment down 25% year over year. Oh my gosh, those businesses are a disaster. Not so fast. Those businesses are both showing signs of bottoming right now. How do I know? You got to look deeper into the numbers. Look at what we find right here, okay? The gaming segment was down 29% sequentially, but it was down 69% year over year. That's a sign when the sequential numbers start getting way less than what the year over year numbers are, you know you're already in a bottoming stage in regards to that particular segment. So what we're going to likely see is a gaming segment start to sequentially improve probably in the next 2 quarters. At the latest, probably 3 quarters out, but likely in the next 2 quarters, you'll start to see on a sequential basis gaming actually improving for AMD overall. Now, when it comes to the embedded segment, this business has already bottomed. How do we know? Look at on a sequential basis. On a sequential basis, which is just a fancy way of saying quarter over quarter, revenue increased 8% as demand improved in several end markets. So yeah, the numbers might be down year over year, but they're already starting to go up again on a quarter over quarter basis, which shows you those minor businesses are already in the bottoming stage, and the two main businesses are booming and likely going to continue to boom for quite some time, especially in regards to the data center business there. So don't get too impatient in regards to this whole AMD story here. I'm even looking at this one saying, ooh, this might be a great opportunity. Grade A income statement they reported here. Revenue $6.8 billion versus $5.8 billion. If you look at gross profit, $3.4 billion versus $2.8 billion in the same quarter last year, right? Operating income, $724 million versus $269 million in the same quarter last year. And net income of $771 million versus $265 million in the same quarter last year. Diluted EPS well over 2x from 16 cents to 47 cents. So AMD is looking really good here. A lot of people are gonna be looking back at this one and be like, what were we doing here? Speaking about what were we doing, mortgage rates suck. Why does that matter? It matters significantly here to understand some epic moves that are likely coming in certain stocks, okay? Mortgage rates suck. They're likely going to continue to suck and be very high for at least probably the next couple quarters here, the next 2 to 3 quarters, which means likely we're going to have very weak new home sales numbers for the next 2 to 3 quarters. How do I know this? Other than that, well, D.R. Horton. Keep in mind, they're the lowest end home builder you can find out there. If you look at their ASPs, they're generally, of the public companies that are home builders, they're the lowest of the tiers. They're the company that should be doing the best in this environment. And even they just announced 2 days ago that buyers are taking a pause on buying new homes, right? And this is the scariest company to be saying this. Because if they're starting to see their buyers dry up in those low brackets of $200,000, $300,000 type homes, what do you think is going to start to happen to the $500K, $700K, or $1 million type price points? And we're starting to see not only is these mortgage rates still suck, right, and it's just weighed for way too long, but additionally, inventory starting to pile up. This is where I live. I live in Summerlin, okay? It's an area of Las Vegas, Nevada. And look at just in my area. I live somewhere in here, okay? And look at so what I sorted here is $1 million plus, right? So not everybody can afford $1 million plus homes, but look at the inventory pile in my area. in regards to $1 million plus. If you're looking for $1 million plus house in Summerlin, you have no shortage of options out there now at this point in time. There's options everywhere. They're everywhere. That the same could not be said a year ago or even a few years ago, right? Inventory was tight, and that led to bidding wars on homes, and sellers could sell whatever. Now these folks that want to sell these homes at $1 million type price point, they're just not finding the buyers out there. And these homes are sitting on the market month after month after month after month. People are having to start doing price cuts, and they're still sitting on the market month after month because they're not doing big enough price cuts. But on some of these $1 million plus homes now, I'm starting to see price cuts at $100,000, $200,000, $500,000. I'm starting to see it. And so this, I can tell you, does not bode well for a super high-end home builder. Who am I thinking about, right? Toll Brothers. Toll Brothers' average selling prices are, guess what? $1 million plus. This is their creme de la creme. This is where they dominate, right? The $1 million plus bracket. And what I see coming for Toll Brothers is I think new order numbers are going to be ugly for the next 2 to 3 quarters. The next 2 to 3 quarters. I don't want to predict a year from now. I don't want to predict 2 years from now or 3 years from now. Too dang hard. There's way too much that can happen 2 years from now to try to predict out there. But I can see the next 2 to 3 quarters in regards to the housing market. And what I see a pretty decent probability that we could see Toll Brothers stock fall to the $120 range. If these numbers are ugly for the next 2 to 3 quarters in regards to new home, because you got to understand, Toll Brothers, people don't care about what Toll Brothers is going to report for their revenue and earnings per share. Those are going to be great numbers. We all know that. You're looking to the future. So you're saying, what's Toll Brothers' numbers going to be a year from now, 2 years from now? And that is, how do you find that out? You look at what their new home order numbers are coming in at. If their new home order numbers are strong, like Donkey Kong, guess what? That means their numbers a year out from now, 2 years from now, when those homes are delivered, are going to be banger. If those numbers are extremely weak in regards to those new home order numbers, guess what? That means their business is going to suck. Their revenue, their earnings per share, their margins, everything's going to suck a year from now, 2 years from now, which then investors say, I don't want to be part of the story during that particular time, and they sell out. And you get a bunch of selling pressure on the stock. And the stock could easily go to $120. I think worst case scenario for Toll Brothers stock is it goes under $100. And that's if not only their numbers are ugly in regards to their new order numbers are ugly the next 2 to 3 quarters, but if you also start having headlines about home prices falling. Because if all of a sudden the mainstream media starts to cover everywhere, home prices are falling, that's going to set up a whole set of dominoes where people that are actually going to sell their homes are going to get way more serious around price when they start seeing it on mainstream media everywhere. When they go on Facebook and they see it, when they go on YouTube and they see it, when they go on Instagram and they see it, when they go on TikTok and people are talking about it on their feed, right? That's a different situation when they put on the TV and everybody's talking about home prices are falling. All of a sudden, sellers start to get real serious real fast, right? And that would be a whole other cycle because no one wants to hold these home builders if the new order numbers are coming in ugly and the headlines start saying home prices are falling. No one's going to want to hold these stocks during that period. And so you could see a very ugly sellout, and it will happen quick in regards to this, which is why one of my main hedge actually I have for 2025 is I put options on Toll Brothers because I'm looking at it and I'm like, yeah, if this thing goes south, which it's kind of looking like it's going south in regards to this home market in the short term, it's not going to be good for these stocks. Oh no, right? No. Another place people are missing out on the opportunity of a lifetime is in a lot of these value and dividend stocks. I'm looking at you, Estee Lauder. Perfect example. I broke down Estee Lauder's income statement. It was way better than it looked on surface level. You have to dig deep to the numbers. You have to find a lot of one-offs in there, and you start to begin to understand, oh, this business is not in some horrible place like people think it is, right? When you start to really dig in the numbers, and I broke that down inside my private stock group here today, right? But in regards to these sorts of stocks, Estee Lauder, right? These stocks are all likely bottoming November, December. They're going to face that big tax loss harvesting, right? And they're going to bounce hard in 2025. We're going to see likely a consumer revival in 2025 because we're coming off of a year where finally we got some air to the consumer, right? Not getting absolutely wrecked by inflation. Inflation numbers are going to be looking great for the next several quarters, if not the next year, right? And so a lot of these companies are going to bounce hard. And Estee Lauder's positioning their company where once that revenue starts to uptick, the profitability is going to skyrocket for this one. And the stock will double up like quick. Like it's not going to it's like, oh, maybe the stock doubles over the next like 5 years. No, no, no. Like once the revenue starts trending back up, the profitability is going to skyrocket, and you'll see a stock like this go from $60 to $120 like that. And people are not prepared for that. And it's a lot of these value and dividend stocks that have just been hammered. You're going to see a lot of money start to come into them in 2025 and 2026, right? Celsius Holdings, I'm looking at you. Another one that I think is bottoming very soon. Listen, if you bought Celsius stock probably in the last 2 years, you've lost money on this stock, right? And so there's another one that I think there's a lot of Wall Street, a lot of investors that are looking at tax loss harvest. Because let's say you're taking big profits this year in Meta or nvidia or Tesla or some of these other stocks, right? That maybe you made a bunch of money in, SoFi, right? Palantir, whatever. Well, if you've lost a bunch of money in Celsius, a lot of people look at this and say, tax loss harvests, maybe I can buy it back the same price in January, February, something like that, right? And so you get this tax loss harvesting income, right? And this is why I said in regards to Celsius over the past month or two, I told you guys, don't trust any rally you get in this stock until you get to 2025, because every rally ends up getting sold off. And that's exactly what we see play out in regards to Celsius, right? It'll make like an 8% move in a day. People get excited about, oh, Celsius is back. And I'm like, not so fast, not so fast. That 8% move is going to be gone like that. Sure enough, that's what we see time and time again with Celsius. You'll have some big day, 5%, 8% move, 10% move, and it gives it all right back, right? And because at the end of the day, you just got a lot of selling pressure here into the end of the year, tax loss harvesting. And so you can start to trust rallies in Celsius in 2025 and beyond, but don't trust it right now. Don't trust it right now, right? But it's a great time as a buyer, right? This is a time you need to be buying these stocks, Estee Lauder, Celsius, these sorts of companies. Wynn Resorts. The numbers have been amazing out of Wynn Resorts. And this is with a weak China. Everybody talks about how bad China numbers are, right? And yet Wynn Resorts is putting up phenomenal numbers quarter after quarter, right? But they sell, who's their income or who's their customer base? Top 10% income earners, top 10% of the wealthy around the globe, and they continue to perform tremendous. We're already in a rate cut environment. That's factual, right? Rate cut environment is very good for companies like Wynn Resorts for two reasons. One, these companies usually take out a lot of debt. If you're talking about interest rates being cut, guess what? Debt gets a lot cheaper. Refinancing a debt gets a lot cheaper as you cut more and more and more, right? Additionally, people start looking around for yield. And they say, gosh, my CD account's not paying as much. My treasuries aren't paying as much. My savings account's not paying as much. Where do I look for yield? And you start to look out there, and you got a company like Wynn Resorts that's probably going to be raising their dividend in 2025, raising their dividend again in 2026, and many times in future years, right? And so you just say, gosh, like Wynn's looking pretty good. Like that's a great dividend paying stock that's probably going to keep up in their dividend for years and years to go in the future. Imagine when they hit that Middle East property, goes from costing them money because they're building that out right now to the money starts flowing in. Oh, baby, okay? And so next thing you know, people start looking at a stock like Wynn and like, ooh, this looks pretty darn attractive. And so you could see immense amounts of money coming to a stock like Wynn over this next 24 months here. And so that's another one that sets up phenomenal. And imagine when the sentiment around China gets a little more positive. Jeez. Whirlpool. I mean, sleepy company, right? They make dishwashers and ovens and refrigerators and all that type of stuff. Sleepy business. But this is a company that I think multi-year bottoms in the next 3 months. When I say multi-year bottoms, I mean like you don't see the stock at these sorts of prices for years to go in the future. And when these stocks multi-year bottom, they start an upcycle that lasts for years. Not like, oh, the stock goes up for a month or a quarter or a couple quarters. No. A stock like Whirlpool, multi-year bottoms and then moves up for several years. I'm talking a 2 to 4 year upcycle of that stock. In the first year or two is the big move. That's the thing you got to understand about these stocks. The first year or two when they start that multi-year bottom and they actually go into that upcycle, that's where the most money's made. That's where the most money's made. Doesn't mean you can't make money after that, but that's where the most money's made. So Whirlpool's not a stock I personally own, but it's one I look at and I'm like, I would love to buy the stock over the next 3 months because I truly believe this one will multi-year bottom. I don't believe in terms of the amount of existing home sales numbers, I think those only improve in 2025 and 2026. Versus where they were at the last couple of years here. And that's going to be a great thing for Whirlpool, a great thing for Whirlpool overall. And so I'm looking at a stock like Whirlpool, and I'm like, this stock likely multi-year bottoms in the next 3 months and then starts a multi-year upcycle for that stock. I think they're in a very good situation, right? And it's just another one of these like value dividend type stocks. Nike. Oh, this one's setting up so perfect. You got the tax loss harvesting. Keep in mind, Nike's a massive market cap company. Huge. Like outside of tech, one of the biggest market cap companies in the world. You know why? Because they're very successful, obviously, right? Known around the globe. They make ridiculous profits. Bad times for Nike are great times for just about any other company in the world, right? And so Nike, likely multi-year bottoms November to December, right? You get the tax loss harvesting selling here. And it's just a tremendous opportunity because this is another one that will start an upcycle in 2025 and then continue that upcycle 2026, 2027, and it'll just keep moving up for years to go in the future. The thing with Nike is that upcycle will probably be longer than some of these other companies. Some of these other more cyclical plays, like maybe a Whirlpool, a Win, those ones will be a pretty incredible, like more 1 to 2 year, if not 3 year multi-year cycle. Nike could be like a 5 year. A 7 year multi-year cycle where all of a sudden it just heads up 20-30% gains a year for 5-7 years in a row and then takes a breather for a while, right? And so Nike, that one's looking dang good, right? Looking at a stock like Elf, I'll be honest with you guys, look at the cosmetic space. All these companies' numbers are not good. Look at Estee Lauder's numbers, right? Look at L'Oreal's numbers. All these numbers are bad. Look at Ulta's numbers. None of these companies are reporting great numbers, and Elf's out there still just putting up these incredible record numbers, right? They're the only bright star in the entire space. Why wouldn't you want to own a stock like this? Like, why wouldn't you? I think, this is a place you want to be, is it not, right? That leads us to the election. We got to speak about the election here. Very, very important. So, there's two ways this thing can go in regards to this, right? But I think at this point in time, who's the market banking on? Who's the market think is going to likely win the election? The market thinks Trump's going to win the election, right? So, being that the market is likely more intelligent than the poll numbers are, and the mainstream media is, right? I mean, like if I had to say who's gonna be more accurate, the polls and the mainstream media or the stock market, the betting markets, I'm gonna definitely go with the stock market and betting markets on that, right? So Trump wins, right? What's that mean? That means small caps are going to make some pretty epic moves. And I'm looking at stocks like Fubo, I'm looking at stocks like Honest, stocks like SoFi, even stocks like Cheesecake. I think they're going to make some pretty insane moves to the upside after he wins the election. You're going to understand, since Biden took office, right? Small caps have done absolutely nothing. That's no political view, that's just a fact. Since Biden took office, these things have done nothing, right? It just hasn't been their time, right? And there's some policy things that can happen there and whatnot, but obviously inflation hit these companies hard. The Fed having to raise rates so high, that hit these companies hard. So small cap stocks have just sucked for the entire Biden presidency of, we're almost 4 years in now at this point in time, right? Here's the deal. From the time Trump won the election, right, which was November 2016, he wins the election, right? Look at what small caps did for the next 1 to 2 years. It was a rocket ship ride for these stocks, right? And keep in mind that 2016 was a very shocking result there. People did not expect that. A lot of people thought, obviously, Clinton was going to win. And then Trump won, and everybody was like, what? Trump won? Like, how did that happen, right? And we see what happened to small caps once he was announced as a winner. And so a lot of people are under the assumption, like, if small caps are going to roll, it's going to have to be, Trump's going to already had to have been in office or something like that. It doesn't mean that at all. Like from the time he would be announced the winner of the election, you could see small caps just booming like immediately, right? Now there is a potential Harris wins. If Harris wins, I would not expect necessarily a rocket ship ride for small caps in the short term here. But if Trump wins, I think there's a pretty dang high probability there'll be a 1 to 2 year cycle in the small caps that will just be epic for a lot of those companies, right? So now keep in mind, the Russell Wilson, the Russell 2000, it has a history of doing nothing for several years. So what I'm showing you back here is 2014 through 2016 timeframe, right? And so we're looking at a 3-year-ish time frame here, and look at the Russell did nothing over that time. But then, after 3 to 4 years of the Russell doing nothing, it makes an epic 1 to 2 year move. And that's what we could likely be going into here in regards to this, if Trump wins the election. If you think Trump's going to win the election, it's near impossible to be bearish on small caps. I mean, like near impossible to be bearish on small caps if you think Trump's going to win the election. You have to be bullish on small caps. If you think Harris is going to win, then I can understand like not being bullish on small caps, right? But if Trump wins, you have to be bullish on those babies, because I think you're going to see a pretty epic move, a pretty dang epic move in regards to those ones. So, we'll see how all that plays out. But I think we're looking really good for an incredible upside move in regards to these stocks. And when we talk about upside moves in regards to these stocks, it's not like some of those other stocks where it's like, oh, maybe we get a 20%, 30%, 40% move a year. You'll see some of these stocks move hundreds of percent in a 12-month span. I said hundreds of percent. We're not just talking about, it went up 10, 20%. No. Some of these stocks will double, triple, quick. So, I don't think anybody's even remotely like on this like thought process of like what could happen here and the setup and those sorts of things, man, because it could be absolutely epic. I have some videos on here on the main channel recently that you guys might be interested in that discuss some of this, right? This video from 3 weeks ago, 3 high potential stocks. That video could help you out immensely, right? The SoFi PayPal video that I created a day or two ago, definitely check out that one. This video from 3 days ago, buy this stock if you like easy money. I'd go over 5 stocks that are just easy money over this next bit of time here. This video you guys will definitely love, right? Top 7 dividend stocks to buy now. Whew, that's a really good video, and I'm telling you that video is going to come in key because there's a lot of these great value and dividend opportunities that you've got like a next 2 to 3 month span to be a buyer of. Definitely want to check out that video. And then this video here from 13 days ago, 7 millionaire maker stocks with unlimited upside. You'll definitely want to check out that one as well there, right? And then if you want just a beast of video, this is my favorite video still I've done this entire year right here. 16 years of stock market advice in 52 minutes. That's my best. It might not be the most viewed video, but I'm telling you, that's the best video I've done all year if you're really serious about stock market investing, right? All right, guys, appreciate you joining me as always. Once again, this is the last day to get in before the 30% price increase on those 2 Patreon tiers. So if you want in for the grandfathered pricing, click the pinned comment down there and join in there. That's access to see the stocks I'm buying and selling each week, including, what was it, yesterday or the day before, I posted some moves. I sold out of 2 stocks completely with some great profits and moved that money into a new stock, which is already booming for me. So if you're interested in that, pinned comment down there. Much love and have a great day.